Hi, welcome to the Financial Express Budget Special Series. We will talk today about direct taxes, one part of the budget which makes everyone sit up and listen extremely carefully. To talk about direct taxes, I have with me Mr. Gokul Chaudhary, who's partner direct taxes at Deloitte. Welcome, Gokul.
Thanks, Sumit.
So the big announcement a couple of budgets back about moving to a 25% tax rate for corporates. It happened somewhat last year for smaller companies, but when is the entire transition going to happen?
You're completely right. When this government came in and they presented virtually the first budget, and now we'll be listening to their last budget of this government, they spoke about bringing in direct tax reforms. One key element in that direct tax reform was how to get rid of all the tax exemptions and tax holidays that clutter the income tax code, and instead give the taxpayer, specifically corporate taxpayers, a lower tax rate. The finance minister promised a roadmap for elimination of tax holidays, and that within 4 years he will bring down the corporate tax rate to 25%. That's the package that he outlined in Parliament. I think everyone's keenly awaiting the 2018 budget because that will show us whether the finance minister is able to keep up to his commitment. Most tax holidays have moved out. They've been given a sunset clause, and they're running the last limbs. So effectively, that part of the plan has already been implemented. And yes, you're right, the finance minister gave two benefits. A, to manufacturing companies that do not take any additional tax holidays to be given a 25% rate, and that came in 2 years ago. Last year, he brought it down for small companies with a turnover of 50 crores to be given a rate reduction. So I think ideally, the finance minister should bring down the corporate tax rate to 25%. That also aligns to the fact that we are on the cusp of a corporate tax rate war around the world, with the Trump administration having talked about a 21% rate in the US, and UK is already below 20%. Pragmatically, maybe the finance minister could try and protect some of the revenues because he's also watching very carefully the GST revenue collections, and may say, well, instead of a 50 crore turnover of small companies, I extend it also to medium-sized enterprises for, let's say, 500 crores. So either he could up the number on which the threshold of 25% applies, or ideally he brings it in for everyone and honors the commitment that was spoken about 4 years ago.
So does he go down to, say, 28 for everyone, or does he go down to 25 for everyone?
Well, the thing is that even if he brings it down to 25%, with surcharge and cess, it anyway comes back to 27.5%. So if he was to try and give the benefit, he might have move it back to 25, knowing very well that he's going to be midway between 25 and 30 on an effective basis.
Okay. So there's also talk about the Dividend Distribution Tax, and that comes up, I remember having covered the budget for so many years, that the taxation keeps changing every now and then. There's a huge debate each time on whether it should be taxed at the time of distribution or in the hands of the receiver. There is expectation, there's talk that something will happen this year as well. How do you expect it to change, and should it change?
I know this conversation has been going along, and there's been a bit of flip-flop in the past also on whether the dividend income needs to be taxed in the hands of the shareholder, or is it more efficient to be taxed at the hands of the dividend-paying company. Globally, the pattern is for the tax to be paid at the hands of the shareholder. In India, for efficiency, it was then moved on to the dividend distribution tax basis so that the companies discharge it. Now that creates a number of anomalies at times because you're running against the grain, and specifically when you come to multinational enterprises, because they're accustomed to receiving dividends and also having the underlying dividend withholding tax for which they can take credits in their home countries and jurisdictions. Dividend distribution tax, therefore, is an outlier in the tax world. That said, the finance minister probably may not wish to tamper with too many of the taxes that underlie his exchequer and his revenue build-up, because we must remember that he is experiencing a completely new and different indirect tax regime which has yet to stabilize. And therefore he may be tempted not to go in for any major changes in the direct taxes side other than some of the rate cuts that he has promised, because that has an impact of destabilizing the revenue projections that he may be living with. So I would imagine that he may go for a stable situation this year.
So no change
possible.
So would that also be true for long-term capital gains?
Well, capital gains has been subject matter of tax amendments for the last 2 to 3 years. And the capital markets start getting a little concerned every time we come closer to the union budget as to whether there will be anything specifically done, specifically for investors who are in debt or equities, short-term or long-term in the Indian capital markets. Now that sort of seems to build up every year, just in the budget season. I hope not. I hope that having changed the base on which you have the dividing line between long-term and short-term, having been done to 2 years last year, I would imagine the finance minister should try and give it some stability to what he had proposed last year and implemented, rather than come up with new rates and new bases and new corrections, because each of these changes has an impact on investor behavior. And the fact is that you change some of these, it's not necessarily it's going to translate into higher tax revenues, because effectively it's only going to impact how investor behavior changes. So for example, when they move from 3 years to 2 years holding period, well, all people are going to do is, well, they're going to hold for a shorter period. If you move it back to 3 years, they're going to hold it for a longer period. It's not necessary that they're going to start disposing of equities earlier to lose those exemptions. So I think behaviors can be influenced, but revenue movement is difficult to predict. Will immediately follow any change.
Yeah, and why perhaps needle the markets in an election year. Yeah, going into one. So there's again all these concepts of poem, car, your bets. Again, a lot of conversation around this. A lot of let's say angst around this as well in the run-up. Are there still any issues that are yet to be clarified and which the industry would want immediately settled in the coming budget?
I think one area where industry recognizes that the business models are evolving and technology is impacting is the digital economy. Not just in India, but around the world, the debate is still on how best to address this whole issue of taxing the digital economy. India did bring in the equalization levy as a mechanism. One of the things to look out for is going to be what has that yielded as a revenue to the exchequer. B, whether there will be an expansion of the equalization levy to other forms of digital income. For example, if you look at the committee report that underlay the equalization levy, it actually had articulated the number of streams of income on which this tax would apply. The government had picked up only one stream the last time around. So therefore, depending on the experience that the government has, maybe we could see some amount of development there. The second thing is that in continuation to your earlier discussion on the corporate tax rate, the expectation would be that the MAT rate should correspondingly also go down. The US tax reforms have eliminated the alternate minimum tax, which is there, for example. Similarly, in India, one of the aspects is that, well, MAT came in as a counterbalance to the fact that there were a number of exemptions and tax holidays in the Indian code. And what the government wanted to do was, well, if you need to get those exemptions, you do, but from a cash flow perspective, the benefit is spread over a period of time by having a MAT levy, which gives some amount of stability of revenues to the government, and you are able to take credits later. So you have an equalization effect on your effective tax rate. Now, insofar as MAT is concerned, it's already at 18.5%, and that's when the corporate tax rate is 30. Now, if that 30 comes down to 25, correspondingly, hopefully the MAT rate should also come down from 18.5 to 15. And secondly, the tax holidays having gone out, the depreciation rate having been aligned and moderated, the necessity to have a MAT tax also gets reduced. So I would expect there's some movement to happen on that.
So while corporate tax is the most talked about, there could be maybe other sticking points on the other aspects of taxation. So what in your mind would be the top three issues, if at all the government has to, let's say, settle just these three issues? What are the three top taxation, direct taxation issues that they should settle in this budget?
Well, I think a couple of points. One, there is a presumptive taxation that the government brought in for small traders and businesses. I think depending on how the government assesses the success of that program, I think the government should look at it and try and make it firstly a success, and secondly increase the scope of it, and possibly look at the thresholds for presumptive taxation for traders to be aligned to the same as what GST provides, and therefore have some amount of alignment there. So therefore, if you're a small trader, you have the same threshold for having your presumptive taxation and Income Tax Act and GST similarly positioned. So that could be one thing that could be done. The second thing is, I think, on the tax slabs. The government has now brought in a very low slab, right, for people who are joining the taxable net with 5%. Now, that's the first piece of it. I think it will be important if the government can try and rework the tax slabs for individuals and allow an upward shift to enable that the 30% maximum slab does not start from 10 lakh, but maybe 20 or 25 lakhs. 25 lakhs is what I recollect the Direct Taxes Code had once proposed. So if we can see some amount of movement there, that would be good. Specifically recognizing that slab is when the finance minister has also put surcharges and cesses, which actually increase the rate to nearly 35%. So, can we have a better spread of the tax
so
rate?
On the wish list, is that realistically possible?
He may move one of the some of the numbers at the base. He probably will not like to increase the threshold at which you pay the taxes, because he doesn't want to reduce the tax net or the tax base. But if he can reintroduce the 10% rate, for example, in between 5 and 20, that may be one step that he may experiment with.
So what else on personal taxation? So each time individuals have huge demands, okay, increase our medical allowance, increase the limit under Section 80C, and so on. So what other things that you think are possible realistically in this budget with the constraints that they have?
Well, last budget was all about affordable housing. And they gave a number of incentives for affording housing, and they also gave a disincentive to those housing incentives that fell outside of affordable housing. So second house, for example, or interest deduction more than 2 lakh rupees. So some of those were introduced. It is recognizing that I think the burden of tax which is falling on the middle class, I think the finance minister could well amend the tax slabs and give us a benefit by having a 10% slab and increasing the 30% slab to really start from a higher number. I think if he was to just move that correspondingly, that could be one helpful way to do this, rather than tweak with individual exemption limits.
So there won't be any need to increase limit under Section 80C or medical allowance or transport allowance and so on?
Well, those have historically been done, and I think I don't know whether it makes sense to move those individual limits or rather move the slabs itself and enable people to have the same outcome, but on a more widespread basis.
Right. So perhaps I think there were incentives for moving people into certain investments like NPS at any point of time.
Well, I think those, for a lot of people, 1.5 lakhs is also a good break to be sitting in with. I think what will happen is if they increase those limits, as you're saying, then people who are going to step outside the tax net could increase. I think that what the government would be served better is that you have the people in a tax net, but you're taxing them less.
Okay, so good point about the tax base. So demonetization happened. One of the objectives apparently was to get more people into the tax net. And even with GST, now that they're tracking everything, they have a better idea of business turnovers and incomes and so on. They again expect to get more individuals as well as businesses in the tax net. So if you had to give suggestions on how the government can, now one, has it resulted in any increase in the tax base, substantial increase? And two, what other steps does the government take to increase the tax base?
Well, I think the first part is factual. The government did put out a press release about 10 days ago, and that indicated what the collections have been from taxes in the first 3 quarters of this year until December. And if you look at that data that they put out, the corporate taxes grew at about 10% over last year, and personal taxes grew at about 22% or 23% over last year, which clearly shows that there's far greater degree of tax compliance among the individual taxpayers. So I think whether we attribute it to demonetization or GST or general good behavior of citizens, we are seeing a buildup of personal taxes more than the trend that is shown by other tax collections. So that's the first part, that yes, more people are, or more taxes are being paid. Are more people paying those taxes? I guess that answer will only come when data gets available, but more taxes certainly are getting collected as personal taxes. So that's the first part. As far as the second part is concerned, I think the government can do well by continuing their tax reforms to make sure people have less interface with the tax department. And more of this can be done online. File your tax returns online, get your refunds online, get your refunds on time.
The jurisdiction-free concept.
The jurisdiction-free, and make sure that if audits have been done, the audit pickup is all electronic. You have to get repose the trust in, build the trust among the citizens to make sure that they feel confident that there will not be a heavy-handedness of the tax department vis-a-vis their tax filings. So that comfort has to come in. Some of it is rolling in, because if you see today, number of taxpayers are saying that their experience with refunds has been far better in the last 2 years than it was before. Refunds come in, they come in on time, they come into the bank accounts, they get their alerts, their SMSs. And they have a number of taxpayers do talk about the fact that their tax clearance as well as their tax assessment online has happened quite efficiently. So I think this whole move to go online, use technology, use computerization to deal with a country of the scale and size of India is important. There's also some very useful recommendations that sit with the government insofar as taxpayer services is concerned. And the Kelka task force that took place nearly a decade ago had a full section on taxpayer services. So government is aware of those things. There's also some amount of attention could be paid, for example, that all of these companies who are engaged in startups, young entrepreneurs who are in startups, can we make sure that we could have their tax audits done in a special range and not the way they are experiencing some of the hardship today, such that people who understand and encourage startup ecosystem, and that goes with the government's program on Startup India, that gets an incentive, because one of the things that often startup entrepreneurs are struggling to meet with are tax compliances and tax rigors.
So thank you so much, Gokul. I think, as you said, tax slabs would be one of the major things that both individuals and corporates would be watching out for. Thank you so much for joining us.
Thanks, Sumit. Thanks a lot.